Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Tuesday, July 30th, 2019. And what I'll do in this is just briefly touch on the broad markets, and then wanted to do my usual eclectic mix of some of the trade ideas that stand out. It's not all inclusive, but again, some things I'm watching right now, some that were mentioned recently, some that weren't. So we got a few new trade ideas in here as well. Just to start out with the broad market, remember Apple reports after the close today. That's going to trigger volatility one way or the other, most likely, especially with the tech-heavy NASDAQ. Apple's also a top component in the S&P 500, although it doesn't have as heavy a weighting. The technicals remain as they have for the last few days. I'm watching this minor uptrend line here that forms this wedge, big divergent high, so there's still a potential the market's fallen asleep at the wheel. I posted an excerpt from the Wall Street Journal today stating how this has been the second longest streak, and I forget the number of days, I posted in the trading room, where we've had consecutive, I forget how many days now, without any moves in the S&P 500 greater than 1%. So in other words, extreme low volatility. This is price compression. And they said this is second only to right here, this period of extremely low volatility that ended with the October highs. So we know what happened. So the point I'm trying to make is, and look, this one lasted a lot longer. Again, I'll should have had the stats handy for you, but if you're a subscriber to the journal, you can check it out, or just do a search in the trading room, use the search function. But again, volatility can stay low for a while, but I guess the takeaway that I have is, from those periods of extremes, and you have extreme low volatility, part of that is the, institutions shorting, they call it the short vol trade. It creates imbalances in the market. And from those doldrums, those periods of extreme low volatility, usually comes explosive moves to the downside. You get complacency, shorts give up. The other thing I wanted to say to that real quick is keep in mind, if you're new to trading, or even if you've been doing it for a while, learn to recognize, of course, depending on what you trade, but learn to recognize market conditions. I say this very often. If I were to only be able to trade the indexes, I can tell you this, that I would sit back and I would only place, actively swing trade a few times a year. The big moves, the big rips and dips come a few times a year. And other than that, you have these, slow grinding periods, and there are trends, but a lot of the sharp moves for swing trading come in relatively short spurts. And although this is last 2 years, this is a little bit deceptive. You go back, because we've had a lot of volatility, but before then you can see just grinding markets with interspersed periods of sharp rips and sharp dips. So as a swing trader, that's what I like to capture. Trend trader, you can trade the entire trend if you want. I believe the trend is coming to an end. I believe the trend came to an end pretty much. The market has gone virtually nowhere in the past. Let me get rid of the drawings and show you. If we zoom in tight right here, from this period, even if you want to go all the way back to the beginning of 2018, now you're talking over a year and a half. And this is where the SPY is today, up a whopping 4.84%. So that's what, less than a 2% annualized return if you're a 401k investor, whatever, and assuming you had all your money in equity funds, which is extremely aggressive. Since that high there, 2.24%. So again, it's a market, I'm not going to say hasn't gone anywhere, because we've had a lot of big ups and downs since. But again, when you take a look at the bigger picture, it appears this is certainly expansion in volatility. And this was, the record low short vol trade that led up to the highs in 2018. And those periods are followed by volatility. People see what they want to see, and myself included, I try not to succumb to confirmation bias, but my outlook, my longer term outlook, is based on technicals and fundamentals, things where we're at in the business cycle. Of course, the Fed has given this market a stay execution, with recently flipping from here full-blown hawkish to full-blown dovish, and even more dovish recently, giving it another lift. But some might talk about this period similar to back here. Maybe it is. Market will trend up. But again, you have to just look at history. And this is the longest economic expansion and bull market in history. And there's a reason why things revert to the mean pretty much beyond the scope. I don't want to get into, talk too much about fundamentals, but there's a reason why you cannot have an economy that expands forever. It has a lot to do with competition, the dynamics in the economy, wage pressures, other things, some of that we're not seeing right now. This is sort of a zombie bull market, and they've called it. But again, to think that we're in a period of consolidation now that's going to lead to another 3-4 years, anything is possible, but it's unlikely. But we'll see. And again, I'm not, we're not trading. There's no sell signals on the market right now. We don't have any active positions on the markets, but we are watching those levels that I showed you right here for the next potential swing short. 294 is a level to watch. Once this wedge breaks, that'd be my first target, and then if that goes, and we could get some more. Let's see, QQQ. Similar story there. QQQ just right on the bottom of the wedge. There's our wedge right there. And as I've been saying, until tech breaks, the market doesn't break, or at least not with conviction. So there's XLK. I'm going to loosen this trend line up a little bit as I zoom in here. You can see I missed the bottom of the candle there. It's limping below, but again, you wouldn't take a breakdown in tech today with Apple being one of the largest components in there right before they report. It's, as I always say, the odds of whipsaw signals and false breakdowns before earnings is greatly increased, especially when you have a top component. So there it is, and I captured that trend line a little bit better. So that's what we want to watch in the broad markets. Now let's move on and look at some trade ideas, because as I said, yeah, the markets have gone up. That's XLK. And there's been a little bit of money to be made if you were long, and I pointed out the 60-minute bullish chart patterns down here at the lows and bearish. So there's been swing trading ops, and I certainly didn't milk all that. Tried to get in short a little early this time around, but we were already stopped out of that trade for a minimal loss, and I'm just waiting for the next one here. And again, there's also the potential to either hit maybe a single or double again, or go for the Grand Slam, because it is potentially priced in the charts, the Grand Slam being a move down to and quite possibly below the December 18 lows. Again, don't fall asleep at the wheel, because just when it seems like the market will never go down again, that's usually when everybody's come to that same mindset, the masses. So you have lopsided bullishness, low short interest, because the shorts have been cleared out, and that sets the stage for the reversal. So up until and unless we get that, just sit tight, and with the Apple on deck tonight and the Fed tomorrow, we'll see. Maybe we get some sell signals, or maybe it's more of the same and we continue higher, and if so, we'll just continue to trade where the best ops are. This is one of them. I mentioned this yesterday, I believe. Potential inverse, or not, I keep saying inverse. Potential head and shoulders topping pattern, not an inverse. Inverse are your bottoming patterns. That's it. And I said, we're with the Fed on deck and kind of this right shoulder stretching out a bit. So ideally, again, it's only potential pattern. We need to start seeing treasuries come down impulsively to the neckline. And then if that happens, then we'll have a nice, clear objective sell signal to trigger on a break below both this uptrend line right here and the neckline of the inverse head and shoulders pattern, and that should swing us down, somewhere in here, at least to this point right here. These reactions gaps, again, just a setup. It's not official trade, or even I haven't even posted it as a trade setup yet. Let's see what happens with the Fed first, because it's going to take, treasuries would have to come down and start to finalize this right shoulder. So that's one on watch. Let's see, what else do we have for you? Let's go to let's jump over to NG, natural gas, because there I did see a couple questions in the trading room. Doing my best to keep up and answer questions and chart requests. My primary focus has to remain on spending a lot of time, most of the time in my day has to be spent looking through charts, looking for the next setup, the next opportunity elsewhere. So I'll do my best. There are times where the market's slower, questions are slower, and I'm Johnny on the spot answering those questions. Other times I may take a while to get back to, or may even miss them if they get buried down the line in the trading room. So just bump me again, and please be patient on that. Again, if you're a gold member, and if you're a silver member, please remember, on the front page post that I make on the right side of the chart.com, you have a comment section. Both gold and silver members can reply there. Those comments are intended to be on point to the post. So if I post, for example, the other day, an update on the broad market, SPY, QQQ, Certainly, if I didn't mention IWM, you can ask about that or a question related to the broad markets, but please don't ask about a marijuana stock or, IBM. Or something that's not related to that. It takes it off topic number one. And chart requests, that's part of the reason gold members pay quite a bit more than silver members. That is a benefit for the gold membership, where I'll give you my 2 cents on an opinion, and others in the trading room can as well if you want an opinion from others. So please don't use the comment section to make chart requests on securities that are not covered in the front page post. But again, if they are, or it's something closely related, by all means ask away. That's what that's there for. Okay, that being said, that's not what I wanted. That's NQ. I wanted NG. Let me find, I've got a lot of charts down here. NG, okay, natural gas, 60-minute chart. I've had there's always a lot of buzz on this. Natural gas is, it's a great trading vehicle. It's volatile as hell. You get these big moves, cuts both ways, of course, but it seems to be a favorite of myself and a lot of other traders. There are times I step back, but I want to just point out what I'm seeing now. So we had this previous reaction low from back here, and that was, what is that, June? Late June, and we've fallen to that level. I had it about 211 or so, 212. We fell to it, brief overshoot. Remember, natural gas is volatile. It will overshoot support and resistance levels. So far it's holding, and what I point out here on the 60-minute chart, we have divergence. Just like we had positive divergence, small divergence here, right? And it led to a relatively small rally, but that's actually pretty big. Natural gas trades, you go from 220 up to 230. Think of it this way. Here's how my mind works. Just shift that decimal point. If you have a hard time computing what kind of move that is, say that's a $22 stock going up to $23, something along those lines. So and especially if you're trading NG, which is leveraged, get a lot of questions. What's the best vehicle to use? The ETFs do have a lot of decay. Some traders don't have either the capital to trade futures because of the leverage factor, or the experience. I would say read up on it, but remember, there are a lot of these new mini and micro futures now that have come out. So you have the mini futures QG instead of NG. QG is the mini natural gas contract. It trades with a much smaller leverage factor, but the nice thing about it, they trade like all these minis. They have index micro minis on the index futures now, or micro futures, whatever they call them, and they trade on the same price scale. So therefore, although I like to trade NG and I post these charts, you can trade QG and use the same charts, but you're just not leveraging up as much. So that's an option for you. And again, there's some nuances you need to understand, risk involved with trading futures. So please read up on it, do your own due diligence, and if you're not comfortable, stay away from those. Your broker will have plenty of educational information, and probably in most cases they'll get on the phone with you and talk to you about futures, because it's benefits them when you're trading futures. But just be careful, okay? So that's what I want to show you. We're at support so far, holding it with bullish divergence. Remember, we had the divergence there. It led to that pop, and again we have divergence right here. This would be our divergence line on the RSI right here, and on the PPO we've continued to diverge since this point. And so our next buy signal remains on a break above this downtrend line right here. I mentioned that back here as a setup, but we never took it out. We were rejected off that last tag, and resistance remains resistance until unless taken out. If it's taken out, these would be my targets. So one to watch. You can take, it's certainly a falling knife, but if you like to catch that falling knife, you go long here with a stop below the recent lows for a ride up to at least that trend line, maybe even sit tight, because you have these divergences that indicates it could pop and then run up there. Next first target after the trend line, of course, would be that 221-ish level or so on NG. I need to sharpen my pencil at this point. I didn't do that. I'm going to move that one up there. That would be the next stop, 225, and then I think these other targets are appropriate, and I'll move that one down there. Okay, so this would be my bounce target range. Now on that, if you don't like futures or you don't like natural gas because it's too volatile, there is one that stood out to me today, Chesapeake. CHK, Chesapeake Energy. This is in the the oil and gas E&P sector, which is getting clobbered. Some of these companies, many have gone to the wayside, meaning Chapter 11 in recent years with the low energy collapse in energy prices, crude oil, nat gas. But some will be around, and others, even if they're going to zero, going to file for bankruptcy eventually, they'll be trading up, short squeezes, technical breakouts. So on CHK, I see a nice clean downtrend line. This is a daily chart. Divergent low right here. We have bullish divergence. You can see it all the way here with the PPO and the RSI making higher lows and prices making a lower low. So positive divergence, boom, we're right at my 178 level. I posted this in the trading room the other day. Someone had asked about it, I believe, and I said you need to take out this trend line, but then you have 178 resistance right above it, 178-ish, and so there's your trigger. If it can pop there, it's up big today, but remember, this stock has already fallen since this point here. Just about a year ago, it's dropped down 71%. So a short squeeze or just even a counter trend rally could quite possibly lift it up to any of these levels. I'm going to lower this line for you a little bit here. Let's just say that's a potential target there. If it pops around 213 or so, maybe go at that reaction high 209, sell a little shy of that. And if nat gas and crude pick up, then maybe we come up all the way here to 257. Don't fall in love with it. Don't take a big position. You don't need to take a big position, because if that plays out, that's a 16% pop, and if it goes up here, that's about a 42. So small position means you can allow yourself a wider stop, which you need to if you're trading a low-priced energy stock like this. But so that's CHK. Okay, here's Fizz. If you're listening to this video, you probably already received the email on the front page post. Remember, if you are a subscriber, every now and then I get a message somebody's not getting email notifications. It should happen when you sign up to the site, unless you unsubscribe. Drop me a line if you are not getting a email every time a new homepage post is published, and that will be all official trade ideas. That's for silver and gold members. This is an official trade setup, a setup because it's a potential trigger and an entry. We've already broken out and zoomed down to the 60-minute chart. Again, most of this was covered in that video today. And so you can see here's the 60-minute, I'm kind of zooming in on that trend line, breakout, back test, and it's moving up. And I wanted to see, I have resistance here about 43.21, so I set the trigger to be 43.25. In other words, you want to pop it and give it a little bit of room. There's no guarantee you won't have a little whipsaw through there. It's kind of tough. You want to watch it. Ideally, you want to see volume picking up, impulsive, ideally a 60-minute close. So if you're a little skeptical of this catch a falling knife aggressive trade, as I said it was, you can always wait for a solid 60-minute close or a solid daily close above that trend line. There's bullish divergence, by the way, on the 60-minute chart at that low, and you can see support down here at 40.70. So this would be the first target zone. I have the official target set somewhere around here. That would be the second target zone if you're swinging off the 60-minute chart. And I already talked about this one again in the front page post. Extremely high short interest, an extremely low stock. I couldn't find a bullish headline out there. People that are coming in, these Monday morning quarterbacks that are writing bearish articles now after this stock has dropped 70% off the highs, and telling you why the shorts are correct, why the stock's going lower. I would love to see any one of those authors that pen those articles tell you up here or here the stock was a short, or even halfway down. They were probably bullish, telling you to buy it all the way until recently. So anyways, I'm contrarian, but not for the sake of being contrarian. It's when things reach extremes, and like any trade, this one either pans out or it doesn't. I just think there's a potential, if we can get a catalyst here to pop these levels and get a nice short squeeze, get in, get out, and move on to the next one. BYND, unofficial trade for many reasons. I posted it first on Friday in the trading room because they were reporting Monday, and I'm not going to add a trade the day before they report earnings. It's a gamble. I said I took a short, and I was able to actually add to that today. At first I wasn't. Interactive Brokers, just a little sidebar here. Every broker is different. Interactive Brokers tends to have the best availability of hard to borrow short shares. So usually when they don't have any shares, it's very unusual to find another broker that does. With that being said, and I talked about this in the post last week, IB, you can put up a indicator on your trader workstation to show you the shares available, and they either give you 3 colors. Red, which means forget about it, there's no shares around, they can't even go out on the street and find them. Dark green means we don't have any for you to short right now, but we might. It's close. We might be able to get them for you. And then light green, which means short away. We have plenty of shares borrowed, and they'll even tell you how many exactly they have on hand, or roughly, when you hover over the bars. Now, with that being said, with dark green, you can short it. So, I entered today, was back testing here. Let's go to the 60-minute chart. It went a little bit above the back test on the 60-minute chart. Right here, but if you enter an order and it's dark green, it'll say, it'll accept your order and say they'll fill it pending if they get the share. So then you might want to make sure you cancel if you're not watching, or just do a day order, because the next day you might not want to short around that price. So so they, since Friday it's been on off, even yesterday on off, dark green, light green, meaning they have shares at times and they don't have them. And I'm just kind of a thing for those of you that are trading this one or following this one, and I already shared where I think it's going. I'm looking for a move down here at least that 150 area before covering this current position, unless I'm stopped out, and I'm going to give it room. I was in at a good price on Friday, and then getting in. Fortunately for me, when I hit short, it kept going up a little bit past the back test and filled me up here. So I have a good entry, and I can allow for a move over the highs, and still don't have a big position at all. I'm only trying to short small lots, because if I ask for too much, they're probably not going to give it to me and fill my order. Plus, it's also, this thing swings. You don't take a full-size position on a stock that swings up and down 10% a day. It's just it's financial suicide. Or at the very least, a surefire way to get stopped out, with a big loss. All right, next one up, and I'll update that. We'll keep an eye on it. Next one up would be, I just want to talk on MJ. There's really not much today to mention. I'm still watching, a lot of these stocks falling to support. MJ around that 28 support, a little bit below. We're 28.12. I have support around 28.09, give or take. No signs of a reversal, so if they take us out again, like any trade, it is a small piece of the pie. The pie meaning asset allocation. I talk on that from time to time. I probably don't talk on it enough based on the comments I see in the trading room. If this is your portfolio, you have a certain amount into gold and silver, precious metal. You have a certain amount in commodities. You have a certain amount in the stock market, and within there, different sectors, different stocks, different subsectors of that pie. A certain amount in bonds, or whatever else you're trading, or maybe it's a large amount of cash. This pie chart is different for everybody, but the thing is, you don't have or shouldn't have 100% of your money long equities or short equities or long natural gas or long or short gold. That is also another surefire way to financial ruin. Asset allocation is every bit as important for an active trader, in my opinion, as it is for an investor. Unless you're the type of active trader, like a day trader or swing trader that has a portfolio, leaves it all in cash, and then you hit and run, on specific trading ops at times, and that's your trading account. And then you get in, you get out. That's fine too if that's your style, but personally, I like trading where the best ops, and that's what you'll notice as I do these videos. Pot stocks have nothing to do with gold or natural gas or anything like that. And so one day, I'm down on my marijuana stocks. The next day, at that time, I'm up on natural gas or gold or silver, and it helps to smooth out the bumps so you don't have that emotional roller coaster that starts to cloud and pollute your thinking. You need to trade as unemotionally as possible, and to keep the emotions out, you got to keep those big swings in your portfolio out. And to do that, take a small enough position size that any one position isn't going to hurt you if it starts to go against you, and ideally have different positions. So not much more to say on that. We need to reverse soon. Here's a little minor downtrend line, and again, I'm not going to modify the stop if they take it out. This was trying to catch a falling knife. It was a drop to support trade. I've been looking for that, a drop down here for a long time. Bearish on these guys since they put in a divergent high, saying that, you know, the next major top was in. Divergent high, almost divergent high, divergent low. You know, wash, rinse, repeat stuff. You can see it down on the chart. The divergences are still intact. That's one reason I want to see this one reverse soon. Really pushing it here on the PPO, but we still have that RSI divergence clear. So that's that. Let's just keep an eye on it, and again, I'll update it if there's anything that needs to be. Wheat, only because I've been talking about it, but again, it's not yet an official trade. I'm seeing some things that I like, not enough. Let's make sure this thing is updated. Yeah, it is. Wheat is struggling with that downtrend line. It held that recent low. Again, I've covered it in recent videos. There was a little bear trap there. We popped back up, but we're not moving impulsively yet, and we need to take this downtrend out right here, this downtrend line that's highlighted in purple. Take it out with conviction, then we move up, and I may add that one as an official trade soon. Coffee, since it's related somewhat, you know, I know coffee and wheat are, you know, not directly related. They're grown in different climates. One's tropical, one's temperate. But where is coffee? KC, here we go. Let's just see this one. Sometimes slow to load. That's it. It's kind of hugging that 99.50-ish level. And again, it's just not, there's no ump in there. So like I said, it's a long-term trade still. We already hit our third target on the swing trade and said look, correction likely, and I've covered it a lot. I don't see any reason right now to add to it is all I'm trying to say. It's that support, but it's really not doing much off that support level. This one needs to reverse and start moving impulsively higher, and then we might have a buy signal. I may mention that as another objective long, and it was objective here at 99.50 with a stop somewhat below. Coffee's volatile, so it's going to overshoot support and resistance. And that would be the final straw. You know, that's a big support, 96 and change. If it gets down there, that level needs to hold. Otherwise, coffee's probably going to, if it breaks that with conviction, it'll probably take out, at the very least, revisit and possibly take out those recent lows. So just one that I'm watching right now, not so much as an actionable trade. You know, let's see here. I'm trying to look and see what I have next. Silver, I'm only updating this because you know, there's been a lot of buzz on it lately. We did break out, since I highlighted it yesterday, we broke out of the downtrend line, the descending triangle pattern. Remember, we have, here, I'll draw it out in case you missed that. We had this support right here at 1636 or so, downtrend line, breakout. We went up, hit that first target. We, you know, tested it for a while, and we're moving higher now. So it's still, bigger picture, it's still consolidating, working off the recent you know, overbought conditions. Plus the euro US dollar isn't really moving, or the US dollar is not moving in the direction that it needs to really spur the next big rally in the precious metals. So and gold, same story, just consolidating recently. So I'm just trying to do an update there and tell you that it could take off anytime, gold and silver, and I still am longer term and intermediate term bullish. Just near term, you know, until and unless we break out of this sideways grinding trading range, that could continue for a while, or it could end tomorrow. Next up would be LXU and the chemical stocks. This and well, what's the other one? RAYM are two of my two of my favorites because they have real nice charts. You can take this extra line down because we never made another low, so clean out. So we had very strong, you know, again, usually the bigger the divergences are, meaning the longer they span, or the steeper they are, and or the combination of two leads to the bigger moves. So this one had that, you know, nice downtrend line there, bullish falling wedge, big strong divergences at the lows, came up, regained that 328 level, popped the trend line, went up, hit my 404 target the other day, parked there, had earnings, and boom, earnings today, and it almost went all the way up to my downtrend line. Up right now 25%. It was up quite a bit more this morning. You know, you can see if it doesn't really matter in percentage terms, but that was about a 40 something percent gain there. And this is what I talk about all the time. This is just the beauty of technical analysis. This is a momentum fueled overshoot. You can't make these levels up. I haven't changed this line. It's been there since I believe since I first posted the chart. Back here, 498 is a target. Look what we did. We overshot it. What is that? That is momentum in the finest. That's a gap, opening gap, order imbalances. Took the stock well above the 498 target, and look where we're trading right now, exactly on that level. So that's that momentum fueled overshoot, like a 94-mile-an-hour fastball into a catcher's glove. It's going to hit, snap the glove back, and then come right back to the point the ball met the glove. That's the resistance level, and that's pretty much what's been holding the stock all day, right around there. There's your momentum fueled overshoot, the snap back, and then coming right back down to resistance. So now the thing about this is I looked at the rest of the sector, figured we'd be getting some more movement because that was earnings induced, the pop today on LXU. And so far, somewhat muted. Remember, a lot of these still haven't reported. SQM right there, that's another one I mentioned. EMN, really not doing much, back down below the trend line. MOEH, I like this one too. It just, they report, so here's another one if you want to roll the dice. They report tomorrow after the market closes. And here's your bullish falling wedge. It hasn't broken out yet, but you have the divergences in place. So if I had to take a guess, on earnings, and let me look at the count. I believe I have this one too, and if I don't, I might not. No, I don't. I'm looking at put these in an IRA. No, I'll take a position, a starter position before earnings. I'll probably take that today, and then boom, these are the targets right there on MEOH, and it can go the other way. So remember, if you take a stock before earnings, it is somewhat of a gamble, but again, to me, it's more of a calculated gamble, and based on the charts and everything else. And again, you don't take enough to hurt you if this stock gaps down 10, 15%, even 20%. That's all part of diversification. All right, so I think I covered HUN. If I didn't, there's the other one, HUN. That one broke this trend line, but snapped right back above it today. Reports are reported today, so it looks like whatever happened, they sold it originally, now they like what they heard. The sellers are out of the way, and so this one actually, next buy point above 2107 again, and then that previous reaction high, and that could take it all the way up here to about 2552. FF, August 9th, still waiting on earnings, already broke out. It's kind of hovering around since the breakout, and I think that's it. I told you about RAYM. This is another one of my favorites here, and they report on August 1st. What is that, Thursday? Today is, yeah, a couple days after the market closes. And let me move this trend line up for you a little bit to kind of come in and capture these highs. Let's put it at the trend line now. But again, whatever it happens now, between now and then, earnings can and most likely will cause this stock to shoot up or down the next day and then after hours and pre-market. And you can see the target zones here, all the targets listed out on that one. Few more to update. BGG, I shared this one back here, is a potential. I didn't add it as an official trade yet, and with the setup I want to watch it, and I've been watching it. And actually, before I even added it on there, I covered it several times in the trading room and in videos, along with another one, GNRC, which I'll get to in a minute. And the reason we're both technical and fundamental had to do with PG&E and other utilities out in California now planning rolling blackouts due to their liability. There's just a ton of power lines that are still fire hazards, and when the winds blow, they can ignite the dry trees and catch fires. That's what happened. So what my thoughts were, and reading between the lines, is that there'll almost certainly be subsidies. At the very least, people will be buying generators in those areas. You'll be in an area, if you live in California in those areas, you'll know where you live, and it's probably already been communicated to you, and it affects millions of customers where these utilities are going to preemptively shut down the power. Preemptive blackouts when the wind blows, so there's not fires. And so what does that mean? It means certainly anybody with medical necessity, CPAP machines, other, healthcare machines that have to be run, refrigerated items, restaurants, or people who want their AC and their power on, they're going to buy generators. They're going to at least buy a portable generator, maybe a whole house generator. This was more of a play on the portable generator market. They report on August 14th. Bullish divergence or divergent low back here. It broke out, just kind of moving sideways since. These are if I make it an official trade, these will probably be the targets. And the other one was GNRC. Okay, my last update, last chart I posted on GNRC was this one back here on June 7th, and I said GNRC is coming up on another test of its all-time highs. A solid break above and close above 61 would be bullish, while any pullback to the primary uptrend line would also offer an objective long entry. So in other words, meaning either way, I'm bullish on this stock. Was a matter, did we pull back first, hit the trend line, go up, or do we break out? And what I like about it, you know, as I tell you guys that, you know, a lot of times you're seeing me question or tell you that I expect a breakout to new highs to fail. Now inherently breakouts to new highs are bullish, because when a stock breaks out to new all-time highs or multi-year highs, everybody holding the stock at that point is positive. They all have gains. You have zero remorseful holders of the stock. Whereas in reverse, a stock going to an all-time low, everybody's underwater, and you have a lot of people feeling pain, and they just want the first bounce in stock to get out. So that's opposite here, and that's why breakout to new highs bullish. However, I say breakouts that occur breakouts to new highs that occur with negative divergence and extreme overbought conditions at the same time usually will fail. Well, that wasn't the case here. So we didn't have divergence at the high. That's a 2-day period chart. Let me show you a daily chart. So here's that chart. There's that high, that's 64.7. We were right here, and you can see at that point in time we didn't have any divergence. The RSI was making higher highs. The PPO had already just made a new high right at the breakout, and certainly was burned through. Any divergence potential that was there at the time was taken out afterwards. That breakout was followed by a lot of volume. Look at this buying. Big volume since the breakout, and just like again that chart showed you 60.74, boom, that was a breakout. There was your long entry, and over 60.74, and from there the stock has now rallied. I can't grab the line exactly or it'll move, so I'm going to go under here, and yeah, it's about almost a 20% gain from that point so far. Now I'm updating this because, well, if you're in it, keep in mind there is some divergence forming now. You know, we've made 20% since that entry. It is potential divergence. This could certainly extend with another leg up. I've tucked this one away as a long-term trade, and I might get burned on earnings, but I'm going to keep a core position of this, and it would look something like this. If this one can rally up after earnings, maybe we get another thrust higher, extend these divergences, come like this, and then reverse. Or maybe the divergences get burned through again. Either way, I did want to mention their reporting. I don't have a huge position in this or BGG, is why I'm letting those guys ride. And again, they're core holdings, but I may look to add on an objective pullback. Should the stock come all the way back down here and the charts confirm, that would offer another objective entry. So let's just watch this one. I wanted to do more of an update. Wouldn't chase it here if you're not already in it, but I pounded the drums pretty hard on these two back then a couple months ago, so I just wanted to update that, and so far so good. All right, finally, ag input stocks. This video is going a little bit longer than I wanted to, so I'm going to rifle through these really quickly. These are in the agricultural input sector. That's fertilizers and things like that. I'm just going to highlight a few that are moving today. Somebody pointed one of these out in the trading room, and I wanted to follow up that. I looked at it, and I saw quite a few in the sector. Here's one, NTR, big move, potential downtrend line there. We'll watch it. CF. Popping, this one's clearly in an uptrend, just popped to a new at least 2019 high there. MOS, Mosaic, and I don't have all these charts updated. I'm just rifling through these. ICL, here's one looks to be breaking out, had a little false breakout here above the downtrend line, breaking out now. Could continue to run. Scott's Miracle-Gro is only one I'm actually more bearish on than anything. Break of a trend line here, but if I see momentum in the sector, I'll hold off from shorting that or adding that as an official short trade. IPI moving, but has some work to be done. I'm trying to just scan I'm trying to just eyeball this chart here. My watch list, I should say. It's on another page or another monitor as I'm going through this. AGFS had a potential divergence here on the RSI. Let's add a downtrend line. Let's take that away right now and that away, and let's just watch this downtrend line right here. SNES, Mm, nothing jumping out there. So just a sector I'll keep an eye on. I just wanted to point it out that there's movement going on in this sector right now, and there may be some follow-up, and a couple of these stocks look objective. Okay, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.